like we may have 4 participants with us tonight. So I appreciate you taking the time and showing an interest in the budgeting process for Thompson School District and what the 2021 budget looks like. If I could, I would ask, I'll just make this statement, I guess, first. I'd like this presentation to be as interactive as possible. So if you have questions as we go, certainly feel free to stop or get my attention, or in the chat box. If you're familiar with that feature in the upper right-hand corner, there's a chat feature and you can type questions in there. I'll try to keep an eye on that and address those questions, and we'll just continue on that way. If you just want to sit and listen to the presentation and view the slides, you're more than welcome to do that as well. But again, any specific information I can provide you, any feedback or any answering of any questions, certainly don't hesitate at all to ask. So to start with, wow, what a budget cycle it was here, with the challenges we had from a state level and the pandemic and being having schools closed for the last quarter. There were a variety of different situations that we had to deal with. So it was an interesting process, a delayed process from what it normally is, but we'll talk about that a little bit as we go here. So diving right in, I think it's important to have a little bit of information on the legislation that's involved in setting a school budget. It's guided by statute that's in the state constitution, and there's 4 or 5 key pieces of legislation that you'll see here. Each one of these in and of itself could be an hour-long presentation, if not longer, for each one of these items. But we won't nearly spend, of course, that amount of time on these. But I do think it's important you have an understanding of what these are, what legislation is in place that governs the K-12 or kindergarten through 12th grade budgeting that we do. So first is the Gallagher Amendment. It was enacted in 1982, and it has to do with property taxation. Property taxes are a fundamental method of collecting revenue for the school district. The Gallagher Amendment relates to that. When it was first adopted in 1982, the property values were 45% residential and 55% non-residential. And legislators at the time thought that sounds like a good ratio to have, and we will put that into statute, which is in the Gallagher Amendment. Over time, as residential growth has far outpaced non-residential growth and assessed valuations have grown substantially within the district, it's created an imbalance. It creates a very unique funding mechanism and taxing mechanism for property owners throughout the state, and how those taxes relate to the district. So the local share of taxes are collected through property taxes. The state contribution to school finance funding primarily comes from state income tax and state sales tax. But the Gallagher Amendment is something you'll hear more of over the coming months. There's an initiative that is, I believe, going to be on the ballot in November. It talks about repealing the Gallagher Amendment and trying to modernize it some, obviously, since it was enacted in 1982. Next is the Taxpayer Bill of Rights, or TABOR, as you may have heard it referred to. It was enacted in 1992, and it establishes limits on government growth was the intent behind this. So all that spending or all that revenue can increase is the rate of growth, which is population growth, plus inflation. So those are the 2 factors that go into calculating how much spending can increase each year. Just know that in a year like we're heading into in 2021, the state is expecting $3.3 billion less in revenue, primarily from state income tax and state sales tax. So that required a fairly drastic reduction of the state budget to get to that in order to maintain a balanced budget. And we'll talk about that a little bit more as we get further into our discussion here. The Colorado School Finance Act, or SFA as it's referred to, was enacted in 1994. That's one of the 5 oldest unmodified school finance acts in the country of the 51 states and territories that have education funding. So it's a fairly old act. It sets a base level of funding plus various factors that go into determining funding that each district in the state will get. There are 178 school districts in Colorado, and Thompson, by size, by student count, is 17th largest of those 178 districts. The School Finance Act looks at that base funding figure that's set by the legislature, and then various factors. So size factor, meaning the size of the district. There's economies of scale if you're a larger district, to cost of living factor, to at-risk factor, which is typically defined as free and reduced lunch population. That's the risk factor that's typically out there. So there's various factors that are applied to that base funding calculation to get to what each district is entitled to for a per pupil revenue, or PPR, basis. The tagline, when it was passed in 1994, was that one of the taglines was quality of education should not be determined by zip code. Unfortunately, I would say that's not necessarily true today, from a combination of factors, from the School Finance Act as well as the Gallagher Amendment, where property owners that live across the street from each other, quite literally, could have different property taxation rates or mill levy rates that are associated with their property based on a variety of different circumstances. So again, in 1994, when it was adopted, it was a good act. There's been changes over time that it hasn't, the school finance funding hasn't necessarily kept pace with. Amendment 23 is the next item, which was enacted in the year 2000. That says growth plus inflation applies only to the base School Finance Act funding, where the School Finance Act itself seemed to indicate that it was based on total program funding, meaning, just to pick a number, let's say that they say Thompson School District is entitled to $50 million for School Finance Act funding. That's called total program. Amendment 23 breaks that down further as the result of a lawsuit that was filed against the state, and says, no, it's not the total program that's in place that has to be in place. It's the per pupil rate that has to be in place. So every year the per pupil amount has to grow at the rate of growth plus inflation, but overall funding does not. And that is a result of the budget stabilization or negative factor that you see as the last point there that was enacted in 2010. That provides, it's another factor that plays into the calculation, but it's a percentage factor reduction to the School Finance Act funding, to the constitutional formula. Essentially, it's a budget balancing mechanism that the state has at their disposal. So they are able to balance the budget by reducing funding from the state level that goes to K-12 education. So to give you an idea of what the School Finance Act, it's a very complicated formula that you'll see by this next slide. For those of you that are a whiz at algebraic formulas and you want to start at the innermost parentheses and work your way out, I just wanted to give you a visualization of what that formula is that determines school finance funding across the state. And again, all 178 districts have their own independent calculation that's done based on this particular calculation. So you can see the size factor we talked about, base funding, cost of living, online. If you see that first or the second section down, online is an online presence that the school districts have. Ascent, I can't tell you what that acronym stands for, but essentially it means a student that has completed their 4 years of high school in good standing has the ability to apply for admission into the Ascent program, which is an extra year of high school, essentially, for students to be able to take college credit in that 5th year and get college get college credit granted for that. There's a finite number of slots that are available out there, and the state allocates those. Just for a frame of reference, I think Thompson has about 22 and a half of slots, or 22 slots that are available in Ascent. You can see the at-risk funding, and then you see that minus, or the subtraction, of the budget stabilization factor, and that gets us to total program funding. So to give you an idea of budget stabilization, or the budget negative factor, last year in 1920, the fiscal year 1920, that figure was $572 million statewide. Meaning, when they ran the formula, they did all the calculations for this formula that you see, the state was still short $572 million in balancing their budget. So they apply that reduction on a pro rata basis, based on a couple other factors, to the districts throughout the state. In 2021, given the significant revenue shortfall at the state level, that there's an additional $601 million statewide that's going into that. So now the negative factor in total for next year will be 1.1, almost $1.2 billion statewide. So you can see the significant impact that has on total program funding, or K-12 funding. And the quote that I have at the bottom is a common misperception that I hear when I'm out in the public giving public presentations like this, that people will say, well, I don't understand how the school district doesn't have enough money because my property taxes went up. Yes, my property's worth more, but my property taxes went up, and that money I know is going to the school district. So what's the school district doing with that additional funding? And I say, your comment is generally correct with one key caveat. School Finance Act funding means there's a portion that's locally funded from property taxes, and a portion that's state funded from the income tax and sales tax at the state level. Those work together, but as the quote says, the bucket never overflows. So you'll hear the state portion referred to as program funding, or state equalization, or state backfill. That means that they set the figure. Let's just say it's $100, and I'm just picking an arbitrary number here. $100 for per pupil revenue, and there's more taxes that are collected locally. So let's say that breakdown to begin with is $40 will be collected locally and $60 will be backfill from the state. Now, based on a variety of different situations, increase in property values, the change in the mill levy rate, a variety of different things, and the local share now goes from $40 to $45. That does not mean that the total is now $105. It just means that the state now says, great, we thought we were going to have to pay you $60. Now we only have to pay you $55 because you collected it $5 more than we thought you would locally. So the $100 total stays the same. It's just the distribution of that $100 that changes. Thus, the quote there, the bucket never overflows. That $100 bucket never overflows. It just adjusts. Again, for anybody that's joined later here, feel free to use the chat feature if you have questions and you want to type those in. I'll try to get those addressed as we go. Feel free to unmute your mic and ask the question if you want to. Either way is fine there for this presentation to be as interactive as possible. Now moving on a little more to the budget development process in and of itself. So the input that the district receives, this is not me and my staff that go in a dark room and close the door and talk about the budget and decide what we want to do or where the dollars should be allocated. This is, it's a very iterative process with input from a lot of different groups, and I'll just run through some of those very quickly here. So obviously the state legislature has input on our budget because they tell us how much money we're going to get. They tell us what our program funding is and have other restrictions that the state puts on us from a legislative or constitutional standpoint, and based on the revenue of the state, what that is going to look like. So the state legislature certainly has a role in providing input to our budget. The Board of Education has priorities that they put forth that they want us to make sure we pay particular attention to. The Thompson School District Cabinet, which is the senior leadership, the head of each department within the district, as well as the superintendent. Different departments have different needs, and those change from year to year. So that input is received and built into the budget wherever possible. The Thompson Education Association, which is the group, the organization that represents the teaching staff, the licensed staff that we have. Certainly they see what's going on in the classroom, and they have recommendations that they will make, or requests that they'll make, pending sufficient budget dollars available to be able to address those needs. The negotiations committee, which TEA is a part of, as well as district representatives, as well as other employees, employee groups across the district, primarily associated with compensation and benefits, but also with working conditions and a variety of different items there. Employee groups, we meet regularly with each category or each employee group, and the abbreviated listings you show there. Licensed is LIC, that's the teaching staff or the certified staff that we have, primarily classroom teachers. Classified staff is a lot of support personnel. It could be a paraprofessional in the classroom. It could be the front desk secretary or receptionist or bookkeeper at a school. It could be people that work in custodial. That's an example of a classified position. All those support positions. Bus drivers, that's another classified position. And then we have APT, or Administrative Professional Technical. That's the more of the administrative staff. It also includes building principals, so the principals at the schools, and then some of the department leaders as well are APT. That's in order for the size of each one of those groups. Most licensed staff, next is classified from an employee standpoint, and then APT is the smallest group in the district. But all three of those groups have input into the budget making process as well. Then there's District Accountability Committee, or DAC, as you may have heard it referred to. That group it spends the year meeting at various times and comes forth with recommendations and interests that they think would be of benefit to the district. There's a variety of citizen committees that are out there too, from the Bond Oversight Committee to the MLO, which stands for Mill Levy Override. That's the latest one, was passed in 2018. There's a citizens group that serves in an oversight advisory capacity there, or really an audit perspective. There's an ITS, which is Information Technology Services. There's a committee associated with them. Thank you, Carrie, for the correction on DAC. I'll ask for forgiveness on the abbreviation for DAC. District Accountability Advisory Committee now, so DAAC. So ITS has a technology group that they meet with across the district. Business community, there's a group that Dr. Schaefer and others meet with on a fairly routine basis to get input from the business community, what they're looking for, or hoping for, or might suggest from an educational standpoint. So a variety of citizen committees out there. There's also a variety of surveys that go out, both to community and to staff, to try to get a pulse for the feel of a variety of different issues or items that are out there. So as you can see, this is not one or two people or a group of even 4 or 5 or 6 people that sit down and devise the budget. There's a group of us in my department, certainly that's a primary focus of ours, but we receive input from a lot of different groups along the way. Moving on into some of the proposed assumptions that were used in building the budget for this year. And just so everybody knows, the proposed budget has been presented to the board. That was presented last Wednesday night, and we will be asking the board for approval of that budget as we head into the next fiscal year, which starts on July 1st. So again, as I mentioned, that timeline getting pushed back with the legislature being adjourned for as long as they were. And then the whole pandemic issue has really prolonged the process this year. Usually we're wrapped up by now, but we will be asking the board to adopt the budget at a special meeting on Thursday afternoon at 1 o'clock is when the formal vote will be taken by the board on whether or not to adopt the budget. But some of the assumptions that went into building the budget this year from a revenue standpoint, really it's the number of students that we have is a key driver in the revenue that we receive from the state. So you heard me mention per pupil revenue. That's what this is indicated, that it's the number of students you have essentially times the PPR, per pupil revenue, to get one of our significant revenue line items. And we'll see that in just a second on a future slide here. We are projecting a decline of 193 students district-wide. In the School Finance Act formula, there's a caveat in there that if there's a district that has declined significantly, you have the ability to average your student count over 1 to 5 years. So you don't take the huge hit all in 1 year. It was really originally designed for some of those districts that are dependent on natural resources. So what's relevant right now, if you imagine the oil and gas industry in some parts of the state with the declines that they've seen, a lot of those will cause families to move out of the district, which therefore creates a decline in student counts. Another example would be not so much now, but it used to be coal mining on the western slope or some of the natural resource occupations that were there. It could cause dramatic swings in student counts. So even though we're expecting to be down 193 students from a funded pupil count, which is essentially the number, there's a slight calculation that takes place there, but averaging brings that down to 94 fewer students that we're planning on being funded for in 2021. Now that can change. It could go either way. We may have families that elect to stay put for the next year. We could have families that move in. We always have that influx of families in and out. But there's a key date. You'll probably have heard it referred to as the October count date. It's the first Monday in October, and that's the date. And there's some wiggle room there. It's a week on either side with some calculations that are done. But really, on that one key date is when we count the number of students, we do the reconciliation with that, we submit that to the state, and they determine what our funded pupil count will be for the coming year. That's when that piece of funding is determined, is at that time. That's why it's such an important date. So if we have students that move into the district in the second semester after being out or somewhere else for the first semester, the district does not receive funding for that student until the following budget year. So that's why the October count is such an important date. The next bullet point you'll see there, increase in the budget stabilization factor that we talked about at $601 million. Certainly Thompson has our share of that $601 million, which in total, the 601 plus the $572 million that was already on the books at the state level, making it $1.17 or $1.18 billion. Thompson School District takes our share of that negative factor or budget stabilization factor. So it decreases our student funding. As you'll see in the next line, that's about a 5% PPR decrease for 2021 from 1920. So you can see from $8,061 per student in the current year that we're in, that's just about to end at the end of June, to next year's amount of $7,661. So a $400 decrease in the amount of revenue that we get for each one of our funded pupils. The last point under revenue from an assumption standpoint is that the mill levy overrides and the other revenue sources are estimated to remain at the 1920 levels, the 2019-20 revenue levels. Just as a refresher, in the district, there are 3 mill levy overrides that have been adopted by voters, one in 1999, one in 2006, and the most recent in 2018. The first 2 from 99 and 06 are fixed, meaning that the dollar amount is not going to increase. Based on assessed valuation, it's based on assessed property values within the district boundaries. And those rates are capped, not fixed, but capped at both a revenue and or a mill levy perspective. So a mill levy is a tax rate on property, is the definition of a mill levy or what it represents. So those first 2 are capped, where we will not get more revenue for those particular items, no matter what happens with assessed valuation from an increased perspective. And it would take a substantial decrease, which I don't forecast for next year, to have less revenue collected. The third MLO that we have in place, the one that was passed in 2018, is called a fixed mill. So it's at 7.6 mills. That's applied to the assessed valuation of a property, and that one does fluctuate up and down. I've done an analysis of the last 35 years, which obviously included the Great Recession in 2008, 9, 10, in that time frame. But going back 35 years, there have been 5 years where property values decreased and 30 years where property values increased. So it's a very good track record for this part of the state in our district boundaries that we have property values that have continued to appreciate over the years. And while there will be some decreases or leveling off of that, I still expect that to be comparable to what we saw in the 2019-20 levels. Moving on to assumptions from an expenditure standpoint, there's 2 key areas where we have expenditures: salaries and benefits, or you'll hear it referred to as FTE, which is full-time equivalents. That's the people and the benefits that we have. That makes up approximately 85% of the district's expenditure budget. So we are a people business. We are here to educate students, and to educate students, a lot of our resources go towards staff that serve that purpose in various functions. And that is all staff, from nutrition services workers to custodians to principals to teachers to admin staff to human resources people that are employed, to business services, which is the department that I oversee. That's by far the largest expenditure that we have is in that area of people, FTE, and the benefits that go with them. So the assumptions that have been made are those FTE positions will be staffed for the full year, less a reduction of 2 contract days. So in order to balance the budget, we had to set contract days, and there's different numbers of contract days. So a teacher, for instance, has a 185-day contract. There are some people, like my position, which is a 260-day contract. That's essentially a year-round, full-year position. But in order to balance the budget this year, we had to offer or impose a 2 furlough day reduction. So somebody like me, a 260-day employee, will now be compensated or have a 258-day contract. However, we have been awarded stimulus grant from the federal government. You've probably heard of the CARES Act. It's dollars that are offered on a one-time basis to address implications from challenges associated with the COVID-19 pandemic. So we are replacing those 2 contract days. They will be covered by funds that are available for 2021 from CARES Act dollars. And there's a variety of other things that those CARES Act dollars will be used for, from professional development to technology to extended learning opportunities, meaning after school or extended day opportunities, summer school, which we're in the midst of right now, a variety of different things there. Safety standpoint, we are certainly interested in having our buildings be as safe as possible when students and staff return. So it's the PPE, the personal protective equipment. It's maintaining the proper social distancing as we work with our county health providers, or not the providers, but the county health organization with Larimer County that direct us on what we need to do from a health and safety standpoint. So there's a variety of different areas that those CARES Act dollars will be used for, but one of those is to help cover the reduction of those 2 furlough days that are being implemented. Salaries, you'll hear steps and columns referred to. That's the licensed salary schedule that's available, essentially meaning a licensed staff, provided they meet the required standards for efficiency or effectiveness and their ability to continue improving in their profession, that if they're here for a year, they move down a step, which means they have another year of experience. So they move one more step on the column. And then we have about 20% of our licensed staff that gain additional education, moving from that bachelor's degree that they need to start with towards a master's degree, towards even an advanced beyond that. So as they gain more educational experience, they move columns. So if when we analyze that and make those calculations, that equates to about 2.61% increase on average for the licensed staff. And past practice has been to apply that same percentage then to the classified staff and the administrative professional technical or APT staff. So that is an increase that is planned to take place for 2021. There's also an employer cost increase for PERA, which is the Public Employee Retirement Account. That's the public, for state employees, that's the public version of Social Security. So staff in a school district or in a state office do not pay Social Security, but they pay or contribute to PERA or PERA instead. So the employer's contribution is going up next year from 20.4% to 20.9% for the benefit of the employees. Non-FTE expenditures is that other piece of the expenditure puzzle, which is really anything other than salaries and benefits. So imagine everything else, if you will. It's the utilities to run the buildings. It's repairs and maintenance of our facilities. It is the insurance that we have to have in place from a property standpoint, property insurance, workers' comp insurance. It's the IT systems, the software systems that we have in place. Anything besides salary and benefits is what goes into that category. So the starting point for that, the assumptions that were made was that our non-FTE costs would start at the 2019-20 levels. In a typical budget year, we would look at what the current budget that we're in, so in this case 19-20, and we would apply an inflationary increase because we know costs are going up. So we look at the CPI or consumer price index of what it is for the area and apply that inflationary increase. We did not do that for 2021 because we knew it was going to be a difficult budget year. So everybody across the departments was asked to not only not take an inflationary increase, but actually do reductions. So we'll see some of those reductions on the next slide coming up here, I believe, or a couple slides forthcoming. So those are the savings or reductions in the non-FTE costs that are planned for the 2021 fiscal year. Looking at our student enrollment, so now we start getting into the specifics, the numbers themselves. So you can see here the 1920 October count, the actual, and then 2021 funded pupil count estimate, and see where those differences are. One thing that I will point out, there's three primary categories from a student enrollment perspective. There's the early childhood or preschool, or so you'll hear it referred to as EC, which is early childhood, or PK, which is pre-kindergarten, preschool. There's that group from a special ed perspective, and CPP stands for Colorado Preschool Program. So in Thompson, we're fortunate to have a very well-respected, robust preschool program, both from a Head Start perspective, which is a grant-funded program, as well as some funding from the state. So you can see the student counts there. The next line is TSD K-12. That's Thompson School District, kindergarten through 12th grade. So that's where the 193 students are being planned to have fewer students next year than we did this year. And then the third component of that is the charter schools. There's 2 charter schools in the district. Those schools, their student count is counted in our enrollment numbers. The revenue associated with those students is accounted for in the district-wide revenue numbers. And then there is a direct pass-through. So the district serves as really just a conduit for receiving those per pupil revenue dollars from the state and then passing those directly to the charters. So from an enrollment standpoint, those are the 3 main categories that we have. And you can see a planned 193 student decrease overall for Thompson TSD K through 12. Funded pupil count is just the calculation that typically that adjusts that membership or the head count number down a little bit. And it's not nearly as relevant as it used to be. Starting in 2019-20, Governor Polis requested and put into his budget request for the legislature to find a way to fund full-day kindergarten. So 2019-20 was the first year that took place. So the year that we just finished up, the school year we just finished, that was the first year that kindergarten was funded at a full day or 100%. In the past, kindergarten was funded at half day with a slight factor. So essentially for every kindergarten student, we received 58% funding for that student because it was half day. But that's been in the past. Now the difference between head count and funded pupil count is very small. There's some students when they get to be a senior or a junior in high school that say, I've got enough credits, I'm on track to graduate, I'm going to go to school for half the day, and I'm going to have a part-time job for the other half of the day. So in that case, we get 50% funding for those students. So really that's one of the few adjustments that we would have now. Pretty much now it's a 1-for-1, meaning a student is funded at 100%. But you can see the differences there. And then I'll point out in that lower section, about halfway down, you'll see the averaging from declining enrollment. That's where we get the benefit of the averaging mechanism that's part of the School Finance Act formula. So translating that into revenue, really those items go into the first line. So the School Finance Act revenue, PPR, you remember that elaborate formula that we looked at previously? That's what this is. Essentially, it's the number of funded pupils times that per pupil revenue gets us to that amount, the $118.4 million. That 118.4 is split between a local contribution and a state contribution perspective. Right now, we are at about 36 or 37% that is funded locally from property taxes, and the remainder, that other 63 or 64%, is funded from the state level. So just to give you a flavor for what that funding looks like, and that's the School Finance Act formula that's called for constitutionally in the state constitution of Colorado. The next section there, you can see the 3 MLOs or mill levy overrides. The district generates about $32 million from those. That's revenue that's generated locally associated with property taxes. So that's part of the property tax calculation from mill levies. Those first 2, the 7.5 million and the 6.5 million, again, are static. They will not go up or down. The 18.3 million, depending on what we see from a property value standpoint, could fluctuate up or down. I would not expect it to go up, but I don't think it will decline significantly either. But that's we'll have to wait and see what that determination is when the county assessors and the county treasurers do their annual assessment for the coming year. The other revenue items that you see there, categoricals, is also state funded. That's a portion of reimbursement that we get for some of those expenditures that you see. Transportation, ECEA is the special education, CTE is the career technical ed, so career technical education. We're fortunate to be opening the new TCC, Thompson Career Campus, starting the 2021 year next fall. So that's what those programs are. We get about 25 cents on the dollar reimbursement or refunding of the dollars that we spend. So from a transportation standpoint, obviously running our buses, the fuel, the repairs, the maintenance, the bus drivers, all of those things, we get about a 25-cent reimbursement on. Same with special education, which is a federal mandate that we have to provide those services for our special needs students. We don't get nearly the funding that is required to service all of those needs. We get about, again, 25 cents on the dollar for those expenditures. Specific ownership tax revenue, SOT, you'll hear it referred to, is a portion of licensing fees that take place within the district boundaries. So when you renew license plates on a vehicle, on a car, a truck, a boat, an RV, a motorcycle, a trailer, any of those, there's a very small portion of each one of those license fees. When you look at it, it'll say specific ownership tax. That is a tax that comes to the district as well, about 2.6 million. If there's fewer licensing fees that are collected, then obviously that revenue would go down, and vice versa. If there's more, that would go up. And then all other revenue at about 3.3 million. There's a variety of different revenue items out there, but they're all fairly small in nature. Nothing terribly material in there in the grand scheme of things. In looking at $161 million of revenue for the district. We move on to FTE expenditures. And again, FTE is full-time equivalent. This is the salaries and benefits. And it's broken down here again by the 3 employee groups, licensed, classified, and APT. So you can see a significant amount that goes into benefits for each one of those categories. So salaries is self-explanatory. That's the salaries based on the salary schedules that are in place, or the pay schedules that employees in each one of those groups are compensated with. Benefits includes that PERA contribution that we talked about that's going to 20.9% for next year. It also includes the health, dental, life benefits that the district provides for employees only. So if an employee wants to cover their family, that option is there. The district will pay the employee portion, and the employee themselves would make up the difference if they wanted to have family coverage or spouse coverage or child coverage on top of that. And then there is a small portion that goes to a disability policy, and then Medicare is the other government tax that's included in there at 1.45%. So again, 119 million that goes into those FTE expenditures. Non-FTE costs, this is a very condensed list. Just know that there's many more line items that make this up, but this is a condensed list. CPP, which is the Colorado Preschool Program, and EC-SPED, which is Early Childhood Special Education. Those are dollars that come to the district, and then we transfer those into another fund that the district maintains, which is where all the activity for that particular program takes place. So we separate that from a non-FTE standpoint, so we can identify those costs specifically that are transferred out of the general fund to another fund. Capital projects is another item that gets transferred to a separate fund, so we can track those capital projects. Those would be larger purchases for the district, larger repair and maintenance items like putting on a new roof or buying new buses or things like that. One of the things that we're fortunate with here in Thompson is in 2018, the voters also approved the bond initiative that had a lot of that deferred maintenance projects included in it. So those roofing projects or asbestos abatement in the buildings, building a new PK8 school on the east side of the interstate to address growth, adding additions at two of our schools, the two elementary schools in Berthoud, again to address growth. A lot of those deferred maintenance projects and items, big capital expenditures, are being covered by the bond, which is a separate fund yet again. But there is some level of budget that's available for capital projects to address those needs on a year-to-year basis. Severance program is something that was established probably 15 to 20 years ago. At the time, there was a second salary schedule that was introduced, and that second salary schedule was at a higher rate, but employees employed at the time had the ability to elect to stay on the first salary schedule, which was at a lower pay rate. But then at the end of their career or tenure with Thompson, when they retired, they have the ability to receive a lump sum distribution over 3 to 5 years. So it's deferred compensation, essentially. They didn't get it during their career, but then when they retire, they're eligible for this severance program. So that's, again, a fairly sizable number at $921,000 in the non-FTE programs. The charter school transfers is by far the largest of all of these, any single item on here. Those are the PPR, or per pupil revenue dollars, that I mentioned before, that come from the state and then get passed through. They come to Thompson School District in a wire transfer. We wire transfer those dollars directly to the charters. So that while we record the revenue on the revenue line, we also have to record the corresponding expense here. Also included in that number of 15.2 million is the proportionate share, or the charter share, of the mill levy overrides. There's been legislation that was passed 2 years ago that says that a district that collects mill levy overrides approved by the local voters now have to create a plan to share those revenues with the charters. So for the last mill levy override, the 2018 one, that's primarily on a per pupil revenue basis. On a funded pupil count basis, the percentage of funded pupils that the charters have versus that of the entire district, those dollars are transferred that way. The other two, the two earlier ones from 99 and 2006, have a little different program because there was very specific language in the ballot questions at the time those passed on how those dollars could be spent. And obviously, neither of the charters were in existence at the time of those two MLOs passing. So there's some reductions that take place, and then the remaining balance is allocated on a per pupil basis. And then all other non-FTE costs in that $22.9 million total. Again, those are some of the items that I mentioned before, from utilities to property insurance to workers' comp to IT systems. All the other costs of operating the district essentially go into that the all other non-FTE costs. It's hundreds of lines of detail, and we'll see a little bit here on the next slide as we move to that of where some of the targeted reductions took place. But looking at the total there, $42 million for non-FTE costs for the district. So as I mentioned, understanding that it was going to be not a good budget year from the state perspective, meaning they were going to have less revenue, which in all likelihood meant that the budget stabilization factor was going to increase, which means lower per pupil revenue. That was certainly anticipated by the district. So we started working with staff, again, not doing this through behind closed doors. This was an open iterative process of we have to make reductions. Here's some of the reductions that we're planning on making. So you can look through that list and see it's wide ranging. A lot of it is in the top part of the schedule is non-FTE costs. In that middle section where you start with reduction of 2 contract days, those are the 2 furlough days, which save the district about $1.1 million. Salaries on a daily basis are about 540 to 550,000 salaries and benefits on a day of operation during the school year. So you can see that level of savings. The next line, awarding of steps and columns across all employee groups, was an increased cost to the district of 2.7 million. And then there were some SEL or social emotional learning positions that were budgeted for FTE that weren't fully staffed in 1920, but did have some level of staffing. So there was a reduction of some of those positions that was planned. But that is another area that I'll point out that we are looking at using some of the CARES Act dollars to shore that up, because we know there's going to be a need when students return to school in the fall of needing that social and emotional support that we'll have from a counselor perspective, or school psychologists, or different positions like that. So we are anticipating using some of the CARES Act dollars to help with that reduction that took place as well. 2 more numbers that I'll talk about very specifically and point out specifically. Use of general fund reserves. That is essentially the school district's savings account, if you will. So knowing that if we have a certain amount of revenue that comes in, we have a certain amount of expenditures that go out, the money that's left is what goes into general fund reserves. So in a year when you have more expenditures than you do revenue, that's a use of reserve balance. Given the drastic budget situation that the state found itself in, or finds itself in currently, and looking forward to 20 and 21, is to not have to use general fund reserves, meaning we have a balanced budget, is what that line indicates, where it's a $0 amount. That's a tremendous accomplishment in my mind from the tough budget year that we're looking at for 2021, to not have to use any of the district's savings account in balancing the budget, I think is a key item. And then, not to say that that didn't come without pain, because you can see the combination of the savings and the increased costs, savings in black and increased costs in red. The total cost reductions or adjustments were still $4.8 million that had to be reduced from the budget in order to get to that balanced budget perspective. So again, significant reductions that had to take place to get to that point. This just puts all of those pieces that we've looked at together. So the revenue, we just looked at that piece on one slide. FTE costs we looked at on another slide, and then non-FTE costs were on the last couple slides. So when you put all those together, you can see revenue of 161.2 million and expenditures of 161.2, essentially rounded, meaning $59,000 goes into the savings account. On a $161.2 million budget, that's a very, very thin margin. That's a razor thin margin. But again, you have to take that with the commentary that goes with it. Given the tough budget year that we are facing for 2021, to be able to have a break even or a balanced budget and put any amount into reserves, I think is an accomplishment. What you're seeing here is the first column in yellow. The yellow heading is the preliminary budget that was provided to the board 2.5 weeks ago, and then the proposed budget that was updated and given to them last week. So you can see on that first line, the School Finance Act, it increased by $3.4 million. That was daily, if not hourly, amounts were changing as the legislature worked through trying to figure out where they were going to balance the budget, what they were going to do, what they were going to cut, what they were going to leave funded as is. So it was a challenging environment from a budgeting perspective to try to understand what that was. So fortunately, the final version that was approved in the last day or two of the legislative session was allowed the district to recognize more revenue, again, based on the intricacies of the School Finance Act formula that we looked at on a previous slide. That's where that increase took place. I will say that Thompson, there's something out there in the School Finance Act formula called a floor funded district, which means that in the Constitution, in the School Finance Act, there's a caveat that says the lowest funded district in the state will not be any less than 95% of the average of the per pupil revenue for the entire state. Thompson finds itself in that category. We're one of 14 districts that are floor funded, meaning we are the lowest funded district, one of 14 of the lowest funded districts, but we can't go below that 95% of the state average for PPR. So really, that's one of the key changes that took place when that number was calculated and revealed, that provided that input or that increase on the School Finance Act revenue portion of the top line there. So after talking for nearly an hour, that's the presentation that I have for everybody. And again, I'd be glad to address any questions that anybody may have, whether you want to unmute your mic and ask a question or type it in chat, or if I've done a thorough enough job of either educating you all immensely on school finance or boring you all to sleep right now. I don't know. That's one of the drawbacks of not having a live studio audience that I can judge that reaction from. So I will open it up to questions should anybody have any. Okay, Carrie, I'm going to open up my questions here so I can see those. The question was, just wanted to confirm that the 2-day furlough was applied to all staff, including educators. Yes, that is correct. It's applied uniformly across all groups, with educators, classified staff, APT staff. All employee groups are partaking in that, but all employee groups are also getting those days covered from grant funds from the CARES Act grant that again sits outside the general fund. What we've talked about here is all general fund, which is the primary operating account of the district. But we have the benefit of those one-time funds from CARES Act that allow those days to be covered. And I think from an educator standpoint, we're working on the details of what that will look like right now, but those will not impact student contact days. So it doesn't mean that on a day that was normally scheduled for school, it's going to be a furlough day, and now parents need to make other arrangements for their children. It's on other days, primarily at the beginning of the year. They are at the beginning of the year, not primarily, they are at the beginning of the year. That won't impact student contact days. The recording, it is being recorded. We will process this and then it will be posted on the website. I would guess on the financial transparency website portion of our website. So when you go to our website or any other district in the state, you should see a Colorado state flag symbol somewhere on the home page. If you click on that, that's called the financial transparency section of the website. And you can go and look at our audit results. We have our past audits there, the budget, salary schedules, a variety of different financial pieces of information. So I would guess that would be where this recording, once we get it, we have to do some translation or migration into another format to then be able to post it on the website, but then it would be available there. Any other questions for the group that I could try to address for you? If not, that looks like perfect timing at 7 p.m. now. I'd just like to take a second to thank everybody that did participate that was here. I know it's difficult in a virtual environment sometimes to have all of this information thrown at you and in what is typically a foreign language to a lot of people. School finance in the state of Colorado is a very complex matter. So I've tried to boil it down to the basics, and hopefully you had that level of um, that you could take from it, the interpretation and the knowledge that was put forth here. But again, I appreciate you taking the time to take an hour out of your lives and take an interest in Thompson School District and under a better understanding of the budget. So I certainly appreciate everybody doing that and spending your an hour of your evening with us here. And absent any other questions last minute?
I did have a question. Do you have the salary schedule for next year for licensed? I couldn't find it on the website yet.
I
So
believe that is a work in progress, so it should be, as soon as we have that updated, we will get that up. Again, with the protracted timeline of getting a budget adopted and negotiations just finishing up a week ago tomorrow, I believe, is when negotiations finished up. That salary schedule will absolutely be posted there. It's just not completed yet, but I have a working version that we use to come up with these calculations, but the refined or formatted version will be posted as soon as it's available at that same place in the financial transparency section of the website.
so do they anticipate huge changes or kind of that regular, what it's been for the past several years?
No, actually, the salary schedule for licensed staff, really all of them should be essentially what you see for 1920. It's just where people, licensed staff particularly, where they fall on that salary schedule. So if somebody moved from step 10 to step 11, you would be able to, or anybody could look at that schedule and know what that cell shows for what the range would be.
Okay,
So
thank
no,
you.
there should not be material changes to that. It should be very close to what you see for 1920.
I had a question. Is the CARES Act that we're getting the extra funds from for next year, is that just a 1-year funding that we'll be receiving? And do you think that's going to cover what we're going to need for the extra expenses to provide all of the precautionary items we need to?
Two-part question. The first part is yes, but on the is it one time? It is one-time dollars that are available right now, unless the federal government, the Congress elects to do something in addition to what's already been passed. You may have heard of the HEROES Act that's out there. That's another level of funding. And there's various components of this. There's the Paycheck Protection Program and all of those more on an individual basis. But there's some funding that has been talked about in the HEROES Act as well, should that be passed by the Congress. We have no control over that. We have no indication of that, but that could be something that could come at some point, whether that be next year or the year after. We just don't know at this point. But the CARES Act are intended to be one-time dollars at this point. There's restrictions on when those can be spent. There's two different tranches or groups of those funds that we've received. One, we have the funds have to be expended by December 31st of 2020, so by next end of calendar year, and the other group has to be expended by September 30th of 2022, I believe, 2021. Sorry, December 31st of 2020, and then the second group or second tranche, September 30th of 2021. It's fairly substantial. We share those dollars as well with charters on a per pupil basis, but it's a fairly substantial amount of funding that is available to us, with the caveat being it has to be used on items associated with addressing the COVID-19 pandemic. It cannot be used as budget backfill for items that were previously budgeted. So we have to be very diligent in how we manage and spend those dollars. But yes, there's a portion in there for protective equipment, for maintaining social distancing if we so choose, if we, as we're directed by the county health. Putting up plexiglass could be an option if we had to do that. Converting gym space or cafeteria space into learning space. There's a variety of different options there. Professional development for all staff, but a lot of that for our licensed staff or our teachers. If we have to go to an online version of educating again, like we had to this past spring, there's professional development training, enhancement of the online program that we have, so refinement of curriculum, adding of curriculum, all of those types of things. So yes, a lot of different areas that can be touched by this that do qualify under the parameters of the program.
Thank you.
Anything else from the group? Well, with that, I will have my final thought. I hope you found this informative. Hopefully you are able to take something from it and have a little better understanding of what the 2021 budget for Thompson School District looks like and what goes into preparing that. And let me see, sorry, I see one more question that just popped up. Did you have a slide that outlined the costs you anticipate being covered by the CARES Act? Nothing in specific. The board is being asked on Thursday at the special meeting to approve a resolution on buckets of funding. So those buckets of funding for the CARES Act dollars are, I'll try to recite them from memory here. Technology, so student technology, teacher technology, network and infrastructure technology, again, to enhance the online learning environment should we need to go to that. Professional development, SEL or mental health related items. And I'm not saying these in order, but and facilities, operation, and safety. So the PPE equipment, hand washing stations, hand sanitizing, signage, all those types of things. And the fifth item is academic and student achievement. Again, not in order, but that's the other bucket that would be the ability for, especially our really are at the population that's at higher risk. So free and reduced lunch or English language learners or special education, as well as all students. I don't want to say that it's not available for all students, but enhancement, those types of things would be after school enrichment activities or the expansion of summer school or development of a more engaging and rigorous online curriculum. All those types of things. So those are the 5 key buckets that have been identified. And you can see that starting tomorrow, it should be posted in board docs, or you can go back to last week's meeting of the board on the website. You can go to something called board docs, which is where the agenda and any presentations are shown, and it will show you what those 5 categories are. Okay. Again, thank you everybody for your time. That concludes our session for this evening. And again, I thank you for your interest in Thompson School District and hope everybody is well. Thank you.